I'm going to start off with how many of you guys could benefit from making, say, an extra 50, 60 grand a year? Everybody, right? How many of you guys would like to be able to help more sellers and more buyers? Yes. Right? The strategies that I'm going to show you are going to be outside of the norm. And I'm going to begin with how I ended up in this rabbit trail of finding all these different strategies, right? Last year, actually the year before that, I had a listing in Rogers of a mobile home that was turned into an actual house. They put in a permanent foundation. The sellers did an excellent job putting brick all over the house. The property wasn't moving fast enough, okay? I was trying to find ways to get this property sold because the sellers were under contract on another home, and they were feeling the pressure for having two mortgages going at the same time, right? One afternoon after I went to check in on the house, make sure that it was everything was closed up after a showing, I get a phone call from an investor, right? The investor says, hey, do you think your sellers will be interested in selling the property subject to? I had no idea what he was talking about. And I said, I'm sorry, I'm not familiar with it. What made me hang up the phone on this guy was the fact that his approach to what he was trying to pitch to me was almost like, I dare you be an agent and not have any idea what I'm talking about, right? I felt like this little, because I'm supposed to be professional, accountable, and knowledgeable, right? That's what PAC stands for, right? And so I started, after that phone call, I like I said, I felt like this big. But that stayed in the back of my mind. So I went home and started doing research. Okay, what is subject to? And now some people will shorten it to sub 2. That's what most people hear is sub 2. As I started looking into this, I happened to land a lead of a distressed seller in Bella Vista that needed to sell in like a week. She needed to move. She got another job. She had no equity. And she truly needed to get up from under this house and have a little bit of cash to be able to move in like a week's time, okay? How do I help her, right? I can't list the property. She has next to no equity. If I put it on the market, there's no way it's gonna sell in a week, right? Even if I find a cash buyer, probably I'm not gonna find that cash buyer that quickly and close that quickly, okay? As I was looking into more of the sub 2, I came across an investor that brought that option back up and said, hey, has your seller thought about selling the property subject to? Okay? And with this, I want to ask you guys a question. Do you guys understand that the name of who the mortgage is under and the title and deed are completely separate? Okay? They don't necessarily both have to match. Okay? So in a subject to transaction, essentially the mortgage stays in place, okay? Jesus sells me a property. He's got a killer interest rate, 2.75, right? Unheard of anymore, okay? Maybe he doesn't have a whole lot of equity like this particular client in Bella Vista, okay? He's got to move. He's got to do it quickly. And if I was to list it, he will be in the hole. He would have to bring money out of pocket at closing, okay? With a subject to transaction, we can fix that, okay? So in a subject to transaction, we're able to structure a deal to where the mortgage stays in place. We can find an end buyer to be able to buy the property. We can put everything in place to be able to have a closing just like a normal sale of a piece of real estate. You'll go through title. They'll make sure the title of the property is clear, and everything is good just like a normal sale. They'll sign the closing documents, settlement statements, all that good stuff. In fact, in most settlement statements, if you pay attention, you'll notice that there's a little line item that says subject to. Okay, that's what this is referencing, okay? So as I started approaching more this particular strategy for some of my sellers, I actually ended up going into a mentorship where I learned exactly how to be able to structure these types of deals. So we're not going to go into a whole lot of detail as far as exactly how to organize it or how to structure it. But what I do want to bring to you guys is there's more layers to the onion that we can peel in real estate that are going to give you guys the tools to be able to maximize the number of leads that land on your lap, right? Most of the time, if we're looking at it just like a normal real estate agent, 99% of the time, either we can list it or we don't, right? That's where our view is. What I want you to look at things now is a little bit more differently, okay? Because we can do two things. We can help the seller and we can help a buyer, okay? We can accomplish two things in a subject to transaction. For instance, let's say you guys have clients that don't have the benefit of being bankable, okay? Whether it's their credit or taxes, because they work construction and they can't go to a bank and get the financing they need, right? But they've got money, okay? And they can afford the mortgage, they can afford to bring some down payment to the closing, but the bank just won't give them the loan, okay? This is excellent for those types of buyers when we're able to help a seller that's in distress, right? And then have a pool of buyers that have got enough cash on hand to say, this particular seller needs 10 grand to be able to walk away from the property for whatever reason, okay? And then we find a buyer that's got that money on hand. So what we can do now, even though interest rates are at 7% plus, now we can get a family that never in their wildest dreams could think that they could get into a property. You guys following me where I'm going with it? So we are actually doing two things. We're helping a seller and we're helping a buyer. I structured a deal in North Little Rock late last year. The seller was going through a separation, same thing, they needed to move out of the house quickly. The property was purchased subject to. The family that bought the home never thought they were going to be able to get into a house ever. No one in their family had ever purchased a house. They had always rented. The lady's mom had rented an apartment, I think, in Little Rock for like 38 years or something like that. Can you imagine? When I was able to get this particular buyer into that house in North Little Rock, her husband and the kids were crying the day of closing. That made me feel a very special way that I was able to fulfill a dream for a particular family that they thought they could have never been able to purchase a house because of their circumstances, okay? So far, it's been just over half a year. They're happy. They're thrilled to be able to now own their own home. They're making the mortgage payment, and they have actually now put my name to other people. Even though I'm not in Little Rock, they're giving my information to people down there to see if I might be able to help them get into a similar situation so that they can buy a house, okay? So I wanna tackle a couple more strategies, but what I wanna do now is to see if you guys have any questions in regards to this type of creative financing to be able to help sellers and buyers.
I have a question in regards to how you approach it with listing agents, but I don't know if that applies now or later.
Very simple. It's in fact, I've had, as of recent, Alberto and I had a listing agent from another brokerage that got a hold of Alberto, actually. And same thing, the seller was trying to move out of state because of a new job. They couldn't move the property, and somehow they got a hold of him. And what we do, what I've done, is I like to have the conversation with the listing agent and the potential seller so that they can understand, because sometimes it's a little hard for a listing agent to be able to translate that information if they're not all that familiar with it. If you're able to do it in that fashion, that's the way to do it. The easiest way to approach it is, would you like to learn a way where you can still make your commission and help your seller, right? It's either you lose the listing or you can actually make a sale.
Yo no hablo, con él, lo he explicado, es just de que no es el traditional way to do it.
Mhm.
And you meet them in person or online?
I've done it both ways.
You've done
Yep,
ways.
both
Okay.
both ways. Go ahead.
Is this kind of like a rent to own for the buyer? I still don't understand.
We're gonna get to that one, so hold that thought.
I have a question. So I know a lot of times the deal is structured where the buyer is responsible for making the payment for the current owner. If they default, I know basically you have it in writing that the seller is protected. But in a way, if the buyer stops making payment, the previous owner basically defaults on that mortgage, right? Is that written in the verbiage of the deal?
Yeah. So the
Francisco,
Yep.
can you rephrase this question so they can hear you?
absolutely. So what Juan is asking is if the buyer stops making the mortgage payment, technically the person on the mortgage, that original seller, are they on the hook? Are they going to be? That's what you're asking? Yeah, absolutely. So because their name is on the mortgage, if that person stopped making payments, then that particular seller will get their credit hit, right? Now, here is what I typically tell sellers. I have personally purchased subject to properties, okay? Most of the time, you have to come up with a little bit more cash than a normal transaction to be able to get into this. So the last one that I got the benefit of being able to, number one, help a seller, and for me to be able to pick up another investment property is I had to put up, I think it was like 25K, okay? It would be, for me, very, very hard to stop making a payment because of the money I stand to lose. I stand to lose the down payment, right? And I stand to lose any equity that I've already built in that property, right? So it's truly to a disadvantage to the buyer to default on those payments. But to answer your question, yes, absolutely. That seller's credit could take a hit if someone doesn't make those payments. But that's like with anything else, right? Personally, I know of investors that do this nationwide that have done it 100+ times. And doing your due diligence to make sure you're finding the right buyer for the property, right? And then the buyer also has to understand what I just alluded to, that if they default, they stand to lose everything, right? So and on these types of transactions, you want to be completely transparent with all parties involved. The risks, the rewards, all that is outlined so that no one is blindsided by anything that may happen in the future. Anybody else?
If said buyer, say a year or two in, they want to sell their property, how difficult is that process? Because technically, it's still under its same process, it's just this.
It'll be like a normal sale, right? Because let's say TW's title checks to see if the title is clear. It'll show the information for this particular buyer, right?
Yeah.
So the moment this buyer wants to sell it in the future, right, closing will go like normal.
Okay.
Nothing changes.
And the mortgage has to be paid off.
Yep.
Yeah, of course, there's the payoff.
Mhm.
Okay.
So
Now the seller is free and clear.
exactly. And in our area, on average, 3 to 5 years is the most people will spend time on any particular property, because we live in an area where property values continue to go up.
Yeah.
Like, people take advantage, they sell, they make that money, and they get into something nicer, bigger, better, so on and so forth.
Yeah.
Anybody else?
Question, does seller have to get approval from the mortgage company to see if they can do a subject to?
Nope,
That's another question I had.
nope,
Because it's not a loan assumption.
exactly.
Is what?
It's not a loan assumption. On a loan assumption, you have to qualify for that particular loan to have it transferred over to your name. In a subject to transaction, the mortgage stays exactly the way it is. Make sense? Now, here's a question that I will ask you guys. What happens with the due on sale clause that all the mortgages have?
What happens with the due on sale clause if the mortgage company asks for?
Yeah, is there anything, any fear that anybody would have to have the due on sale clause if this was structured on the sale?
We talked about this, I forgot.
And that's what we're here, right? We're here to learn. That is the number one issue that needs to be brought up when dealing with this transaction, right? Because, and I'm not an attorney, that's the reason why I brought Paul. Is it illegal, Paul?
It's not illegal. It is technically triggering the due on sale clause. However, with your typical secondary market mortgage, there's nobody at the bank who's going back and checking to see if you sold the house, right? You know, the mortgage servicing company is typically only worried about is the money coming in every month. And so as long as the money's coming in, nothing is done. I haven't seen any situations where anybody's gotten foreclosed on because of the due on sale clause. But if it does happen, it's not the end of the world.
Mm-hmm.
Then what you would have to do is you would have to refinance the property to pay off the old mortgage, right? They could start a foreclosure process on the buyer, and the buyer would have to refinance, pay the mortgage off, and now they just have a new mortgage. So it could be a problem if you have somebody who's unbankable. If that came up, it could be problematic. But I've never seen a bank just randomly check to see if it's been sold and then start a foreclosure on it.
Mm-hmm.
I don't know if that's happened any, but some older people might have some horror stories about it, but I don't have it.
In the mentorship that I'm a part of, there's about 13,000 students. Out of those, there's some very high-level investors that are doing hundreds of these deals. And every one of them will say that maybe 1 out of 1,000 can possibly get the due on sale clause called due. So it's very, 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 very minimal, okay? Any other questions before we move on to the next? Again, we're just doing kind of high-level view of these types of deals, right? And if you guys want to learn more about this, then we can talk to Jose and go in a little bit deeper. Anybody else got any questions? Nope. Okay, so the next one that I want to talk about is going to be wholesale. Have you guys had any wholesalers approach you? Whether when you're trying to list a property or when you have it listed, or maybe you were talking to a seller that wanted to list their house, but say, hey, a wholesaler called me and they said they'll give me X amount of dollars for this property. Do you guys understand what wholesaling is? Yes? Okay. Okay. So let's talk about this. So here's how wholesaling works, right? So this is a contract. Let's say it's for 100K. The wholesaler will go to the person that owns that particular property and say, hey, Mr. Seller, would you take $100,000 for that property? The seller says, absolutely. Send me the contract. Okay? Within those contracts that the wholesalers have, there is a clause that states they have the right to sell this contract to an end buyer. So, for instance, what wholesalers will do is they'll get this property under contract for 100K. They know that they could potentially sell it to somebody else, say for 120. What happens with that 20K from that spread? Exactly. When they assign it, let's say I'm the wholesaler, right? Jesus, you sold me the property for 100K. I then go, and within these contracts, the seller's also signing that they're fine with the assignment of the contract as well as the potential marketing of that property. Not necessarily through the MLS, but whatever other mediums they may use, right? So I, the wholesaler, will grab that contract, will find me a buyer for 120, I'll take it to TWS Title and say, hey, Paul, I've got an end buyer. I'm going to assign this contract to Maria, okay? But Maria is going to buy that contract. She's going to buy the right to take over that contract for 20K. That's how wholesaling works in a nutshell, okay? So all wholesalers do, their entire job is just to find people that are willing to sign a contract for properties well below market value, That's all they're doing. So a lot of times when you're meeting with, especially in the area, I can tell you from personal experience, wholesalers are going hard, especially in these areas where the tornado hit. Some people may just want to be done with the property, right? And they're shooting offers like, we'll give you 60K, we'll give you 75K. You got to realize 99% of these people have never seen that much money cash in their life, right? So this is the strategy wholesalers will say is like, would you accept a cash offer for 100K, right? They don't know the market. They don't know real estate. They don't know that maybe that property is worth not 120, but let's say it's $200,000 property, right? And that's where wholesalers will sometimes try to beat you to the punch and get people to sign a contract before you're able to list the property. Because if they know, if they can come in and say, would you take $100,000 cash? Here is where just the verbiage that's being used gets people enamored with the word cash, right? At closing, how many times, Paul, do you give a buyer, or I'm sorry, a seller, $100,000 in hard cash? Never, right? But whenever they're pitching it to these people, when they hear cash, they're like, oh my God, I'm going to walk away with all this money. Whether this end buyer gets an actual cash purchase for this, or they come up with a loan, hard money lender, whatever, this seller is still going to walk away with a check. But when they're pitching it, people think cash, oh man, that's better, right? I'm not dealing with any financing, any repairs, and that's the whole pitch that wholesalers will have for people. So when you begin to meet with potential sellers about listing their properties, if they've talked to a wholesaler, right, you can come in as the professional and say, well, allow me to do a market analysis, right? Because maybe I can help you pocket more than the 100K. Yeah, but they're telling me it's going to be cash. Then explain to them what that means, right? At closing, you're not going to walk away with cash. You're still going to walk away with a check or a wire transfer. Make sense? Anybody got a question? Go ahead.
Oh, I'd add, we deal with a lot of wholesalers. They're not my favorite.
I get it, yeah.
I mean, we close the deals, but there's a lot of things that come up. The biggest thing is, when you mentioned the people in Rogers, a lot of these guys are not local. They don't know what this property is worth. And so they put it under contract at $100,000 and they think they've got a great deal. And maybe they do in Denver where they live. But here it's not a good deal. And so what we see is a lot of times they can't get the end buyer to close the deal because they didn't get a $120,000 property, they got a $100,000 property at $100,000. And so there's nothing left. And then the other thing we notice a lot of, which would be a good thing for you guys to know, is that y'all have a fiduciary duty, right? Like if my mom's old enough. If my mom wants to sell her house, she's a nice little old lady, I'm not going to send her to a wholesaler. The wholesaler has no duty to her to get maximum value for her house. I'm going to send one of y'all to talk to my mom because I know that you have a fiduciary duty to my mom to get the maximum value for a property, and these guys don't do that. And I think that's the biggest difference is they're going to go negotiate the lowest price possible, whereas if you're representing them, you're there to negotiate the highest price possible.
Mm-hmm. And that's an excellent point, right? That's the value that you bring to the table to a seller, okay? Is you know how to do a market analysis. You can get them the most. Even though in their mind they're thinking they're saving money by not paying commissions, it could potentially cost them, let's say 40, 50 grand that they could keep in their pocket, right? So we want to teach you these different things for you guys to be able to overcome those things, because I've sat with sellers that were ready to sign with a wholesaler and said, well, give me 1 day. Let me do a market analysis, and I can show you that what they're offering you is leaving money on the table. And there was a property that I listed out by the lake in Lowell about 2 years ago that I beat a wholesaler on getting that listing agreement signed because I was able to prove my value. Said, don't worry about the commissions. Let me just show you how much money you can net if you work with me. And boom, they signed.
Nice.
Okay?
Buy on that one too, did you?
Yes. Yeah. You know exactly which one I'm talking about. Yeah. The wholesaler that I happen to be is now my business partner. I didn't even know him at the time, but he found out through many channels who was the agent that beat him to the punch, and he was curious about it. And it was Kevin, by the way. Yep. Yeah. And to this day, he's still trying to figure out how I beat him to it. But it's because I was able to show my value to the seller. Okay? Any more questions about wholesale? Nope. Okay, cool. Now we're going to come to the question that one of you guys had for rent to own. Is that what you asked?
Yeah.
Okay. So I'm going to talk about something called contract for deed, and Paul does tons of these. Okay? Also could be called rent to own. Okay? Anybody familiar with what contract for deed is? Yeah? Okay. For those of you guys that don't know, it's okay, we're going to talk about it. I'm also going to write on here seller finance. Okay? So, properties that I've personally have purchased, whether it's through conventional lending, buying subject to, maybe buying it cash, I have structured deals to where I have done a contract for deed. Now, I'm going to ask Paul to explain what a contract for deed is, because he'll do a much better job on the legal side. If you want to go ahead and just take my spot real quick, that way they can hear you in the Zoom.
Are you going to talk about a note and mortgage style too?
Actually, I'll let you do that.
Okay. So when someone wants to do an owner finance, there's two basic methods to do it. You can do a contract for deed, or you can do a note and mortgage style finance. So note and mortgage is the easiest to understand because it's the exact same transaction, except instead of a bank providing the money, the seller is just basically not getting the money today, right? The seller is going to have a mortgage on the property and is going to receive the payments that the bank would have received. So at the time of closing, ownership of the property transfers to the buyer, and the seller retains a mortgage on it instead of getting a cash payment at the time of the sale. In a contract for deed, though, the property does not actually transfer over to the buyer until all the payments are made. So if it's a 20-year contract, they make their payments for 20 years. At that time, we do a second closing, and then we transfer the deed to the owner of the property, to the buyer. So the finances are exactly the same, but there's a crucial difference, and that is if the person defaults on their payments on a contract for deed, you still have to do a lawsuit, but the seller will end up with the property. On a note and mortgage, you have to do a foreclosure, and the property will be auctioned. So what I typically tell people is if you're on the selling side, you hire me as your attorney to do the paperwork, and you're on the selling side, you're getting a contract for deed. It's more favorable to you because if this person stops paying you in 5 years, you get to keep all the money, and now you've got the property back. You are going to have to do a lawsuit to get there, but at the end of the day, that's what you will have. Because if you do a note and mortgage, if 5 years down the road they stop paying, there's a foreclosure auction, and the seller would be paid all the money they are currently due, and the property would be auctioned off to a new buyer. Right? So at the end of that day, the seller is made whole, but they didn't get anything else. So at the end of this one, if they don't pay, the seller's got the property back. So this one is much more advantageous to the seller. Now, if somebody comes in and they're the buyer, and they say, I want to do this, I say, great, you need a note and mortgage, right? There's more protections for the buyer on a note and mortgage. So 90% of the ones I set up are going to be contracts for deeds. Typically, the seller is the one who's driving the ship on this, and so that's what we're going to set up. And it's not bad for the buyer, it's just they don't have the added protection of, in a foreclosure auction, the person getting foreclosed on would get to keep any excess proceeds. So if equity is built up in the house, and let's say there's $20,000 extra by the time the mortgage is paid off, all the legal fees are paid, and all the other costs are paid, they would get to keep whatever money's left. And so it's a very minor disadvantage for the buyer, but it's a big, huge advantage for the seller, because what the seller really would want, most likely, is they want their property back if it doesn't go through, so they can sell it again to somebody else.
Thank you, Paul. Appreciate it. So I wanted him to explain that portion of it because do you guys remember the meeting that we had with the investors that are related to Waco Title? So,
Yes, Jordan and Ryan.
Jordan and Reich, where they came in and presented to us another option to be able to assist buyers that are not bankable, but if you find someone that's got enough cash to put a large down payment and want to be homeowners, they can step in and become the bank, okay? Maria and Jose had a situation, was it about a week and a half ago?
Yes.
Where there was a mortgage company that was giving an option for these types of buyers to be able to buy a home, but they never once disclosed until they got to the closing table that they were buying it contract for deed. Okay? So here's where we want to make sure that we understand how this works, because as the interest rates continue either to stay the way it is or they go up for whatever reason, right? There's going to be more people that are going to want to still get a house or buy something that are not bankable, and they're looking for options. And if they hear that someone can help them, they're all for it, right? And when, to Paul's point, when things are not disclosed ahead of time, and us as the agents having that fiduciary duty to be able to disclose everything that's happening, how the whole deal is working, can potentially come back on us later on, right? What if I'm to Paul's point, what if I'm the buyer and I didn't realize that a contract for deed was more beneficial to the seller than to me, and you representing me as the buyer's agent, and 6, 4, 5 months down, like whatever, year, 2 years later, it's like, man, I wish they would have explained this to me. Maybe I would have never signed it, right? So these are not necessarily bad, but we've got to know what we're dealing with, okay? There's clauses on some of these contract for deeds, like the one that particular buyer signed, as Maria and I talked about it, that there's a clause that said that they couldn't sell the property for at least 5 years. Now, let me ask you that. Why would that be? Why do you think they would put a clause like that on? Exactly. That's the whole point of some of these investors coming in as the lender. Because what happens is, in a contract for deed, let's say for me, the situation that I had in a property in Centerton, where TWS Title helped me do the contract for deed for, okay? A Lariat, exactly. So the reason why I did structure it like this is because, to Paul's point, I want to make sure that I can still control the property in case they default, right? However, you know, if for whatever reason I feel like that person could become bankable, let's say in a year, if I do a contract for deed and they're able to refinance at any time, then I don't make as much money as I was hoping to make, right? So to basically solidify what I want to make on that property, then I will say, okay, you know, I need to at least be able to become the bank in this position and be able to kind of seller finance that to these people, but at least I need them to hold that property as a contract for deed, making payments to me for 5 years. Okay, that's why they add these clauses, right? And some of them, they won't have anything like that because maybe that particular seller already has all kinds of equity in the property. And the moment they sell, they walk away with a fat check regardless. Make sense? Now, rent to own, basically what that is, or it's also called a lease option, okay? What's happening here is, let's say, someone doesn't have $15,000 to be able to come down on a large down payment on a contract for deed, okay? And to be able to make it a little bit easier on someone, I may say, if I was the seller, I may say, hey, why don't we structure a rent to own? Let's say we'll give you the option to be able to buy the property after 12 months. And you rent the property from me for 12 months. On the 12th month, you have the option to be able to buy it from me. Either A, through a contract for deed, or go find yourself traditional financing, okay? And in a lease option or a rent to own, sometimes what that particular landlord or seller will ask for is for some money up front to have that option to be able to buy it, right? Because on a rent to own, you can lock in a particular sales price. Okay, let's say Paul comes to me and says, hey, I don't have a large enough down payment. Would you be willing to do a rent to own? Happy to do it. But for me to give you that option to be able to buy it from me for, let's say, $200,000, I need you to give me $5,000 to have that option. And in 12 months, you either move forward with this thing, and if you can't do it, then I reserve the right to go ahead and sell it to somebody else, and I get to keep that money for that option that I'm giving you to lock in the $200,000 sales price, right? Because who knows, in a year, that property could be worth $220,000, right? And now you locked in that price with that option to be able to buy it at $200,000. Make sense?
Yes.
Kind of, sort of?
Yes, it's kind of like non-refundable deposit.
Exactly. Exactly.
Usually I've seen amounts of like 40, 50,000.
Exactly, yeah. And now I'm going to ask you this, Paul, because I'm not too familiar with it. Do you know, on the legal side of things, on a rent-to-own type of situation, is there, I know in certain states there is, but in Arkansas, is there like, you know, if you were to ask someone on a rent-to-own or lease option, let's say $20,000 on a $150,000 property, is there any issue in the eyes of real estate law that may say that person already has enough equity in that property for you to not necessarily be able to structure in that fashion?
Well, it depends upon how you structure it. So an option contract is its own separate contract, right? And it can be for anything, you know, and like you said, the exact point of the option is I'm paying you money now to have the right to purchase this in the future. But I might decide I don't want to purchase. Like in stocks, you can buy an option, right, to purchase in the future at a certain price. And if the price goes down, then you don't buy it. If the price goes up, then you do buy it, right? Because you locked in the price by paying this money now up front. So if you structured it as a true option contract, then all that $5,000 was for was to lock in the right to buy the property at a future date at a sales price that's agreed upon today. So that's fine. But if you had it as structured as like the money as a down payment, then you'd be kind of skipping over the rent part, and you would just be straight on the contract for deed.
Makes sense. Do you guys have questions about that? Because you're going to start seeing a lot more of these options as time goes on. Questions?
I had an agent approach me from my house that I have for sale right now. The people are moving here from Vegas to live good for Walmart, and she presented an option to me, but because maybe I should have asked questions, I kind of just said at the moment we weren't entertaining that because we wanted to sell it, but I mean she still said that I could reach out to her and reconsider. But that's what they were planning on doing. They were gonna do like rent to own for a year, and then they were looking to purchase because I guess they wanted to make sure they wanted to have an address for their kids to start school.
I see.
So they weren't sure. They wanted to make sure because I think their house was on the market in Vegas, but they didn't know what the timeline was for it to sell in Vegas.
Sure.
So when I was approached with that, I was just kind of like, oh.
No, right.
Just because it's my personal property. Obviously, if it was for a client, it would be different. I would probably, but for me, it just made me nervous.
Sure.
But now that I know this, it might be interesting to look at. I might have to talk to my husband.
And these
Consider that.
different ways to structure a deal, there's a lot more things that could be done. This is just very, very basic, right?
Yeah.
What I want to encourage you guys to do as salespeople is ask questions, right? Just what got me into understanding all this was one phone call, one person asking me a question I couldn't answer, and then me going back and asking myself, why don't I know this, right? Because I felt like I should have known the answer, you know? So, but I also want to encourage you guys to ask questions, right? If you get, Maria and her husband have reached out to me and say, hey, Francisco, I just had so-and-so call me and they were asking for this, right? And then I was able to tell them, it's like, hey, this is what they're talking about, right? This is how you want to be able to present it to your seller, because you have a responsibility to disclose any type of offer to your sellers, right? I have personally been involved on a deal that I was buying where I know with written proof that the listing agent never presented my offer. Okay? Regardless of how crazy it sounds, that's your duty. Okay? Even if I come in with my investor cap and say, hey, Maria, I know you're having a hard time selling that listing, right? You think your seller will be willing to seller finance it with 0% down, 0% interest? And if you automatically say, no, they're not interested, I know you didn't present it. Now, do you realize that I can go a step further? I can contact Jose, or maybe I bypass Jose. I go to the Arkansas Real Estate Commission and say, hey, agent so-and-so, I can tell you never presented my offer. Right?
I got a question. If you do the rent-to-own option, so they're gonna lease it, let's say, for the first year, and then they're gonna buy it after that. Seems like a critical question to answer from your clients would be, when do you get your commission check? How's that gonna work?
What I have, I haven't done it personally, but what I have talked to other investors that have structured in this fashion is your buyer. If I was the seller, right? If you came to me and say, hey, so-and-so called me, they want to know if it's rent to own an option, I would say, okay, that's fine, but I need their buyer to pay their buyer's agent commission. Does that make sense? And that now with the new NAR situation that's happening, that's not gonna be the rare question to be asked. That's gonna be the norm, right? So again, that's a great question that Paul asked, right? Like if you're representing a seller, that's all well and good, but where do I get paid as the agent, right? I'm representing the seller. So you need to have those conversations ahead of time, right? But I encourage you to ask questions. If you come across something or your sellers bring up, maybe they saw something on social media, they say, hey, I've heard about this process of selling a house. If you don't know, and I've done this personally, I've been honest, it's like, look, listen, I don't have the answer, but let me find out for you. And I'll go and figure out what the answer is. I'll ask him a question. I'll ask Jose a question. I'll come back and say, okay, here's what I've gathered. It's your choice whether you want to move forward with this or you want to wait, right? But at the very least, now you're coming in having more options for any lead that lands on your lap. That's essentially what I want to make sure that you guys understand, okay? So a listing is not moving. What's going on with the listing? It's something that maybe the seller is open to a subject to transaction. They don't have a lot of equity or whatever the case may be. Maybe you can now start putting your investor cap on, right? And I have personally listed, then purchased subject to properties from my clients, right? I disclosed everything that goes into that type of a transaction, right? I was able to give them the money that they wanted. And guess what? I've gotten more referrals from some of those deals that I've structured than just listing a property and trying to sell it normal like in the retail market. Because the sellers saw that I knew more than just putting up a yard sign and signing a listing agreement, right? That's my value. And that's what I want, especially you guys that are here and those through Zoom, is understand that there's a lot more tools available to you, right? You can go out in the marketplace and beat any listing agent by understanding how the wholesale works, by understanding what a contract for deed might be. Maybe you've got somebody that's got 2 or 3 different properties that they own outright. And yeah, the market is the pricing, the values are up right now. But hey, would you be interested in possibly seller financing one of these properties? No, let's move you up from being a landlord to a lender, right? You can make maybe 4 times as much money than just walking away for, let's say, 200 grand at closing, right? You're showing some value here. Oh, I never thought about that. I didn't realize you could do that. Professional, accountable, knowledgeable, right? That's what we want to be. And whenever you come in with different strategies for your sellers, trust me, you're going to be set apart by any other agent that may come in before you or after you, right? Here's a little piece of advice, something that I personally do whenever I'm talking to sellers, okay? This too is gonna just separate you from everybody else. Anytime, as of the last 12 months that I've sat down with a seller, I've said, before we go into, show me the property and anything else, is there any way that I can help you keep the house? What happens there? Trust. Why would you help me keep the house? You don't make any money, right? But what happens is they begin to tell you all the reasons why they need to sell the house, right? You're opening up, they begin to spill the beans. Like, well, I can't keep it because of this, or that happened, and then you don't have to dig and try to ask a ton of questions to find that motivation that we're always talking about. That one question alone is like, well, I can't keep it because I gotta move. I'm tired of this house, or I'm downsizing, or my family's growing, or I'm separating, or whatever the case may be. Just that one little question. And that is gonna bring that guard from that seller completely down. It's like, why would you help? And there's been times that I have personally talked a seller out of selling. I've done it. But you know what happened when I did that? I gained their trust, and now they will go and tell other people about me. As of 3 weeks ago, some business partners of mine who own a property in an excellent location in Bentonville, they were getting ready to list the house. And I had lunch with them, and I said, why are you selling? Do you need the money? Can you just not keep the house? I knew they don't need the money. They've got great jobs. They've got multiple homes. And they said, well, I don't know. I was just thinking maybe I can use the extra $100,000 for whatever. But no, I don't need to sell it. I said, why don't you just keep it? The home office is not even finished yet. Why don't you just wait until the home office is finished? Maybe you get to make another 50, 60, 70, 80 grand. Good point. I'm not gonna sell it. I'll just rent it. And right there, guess who they're gonna call when they're getting ready to. Now I tend to make that I'm seeing it as an investment. Yeah, I didn't make the commission of that one particular sale, but if I'm able to list it for twice, maybe, of what I could have listed today, I get to make more money, right? So begin to think creatively on some of these situations that land on your lap. Or let's say you're getting some leads that you just have no idea how to help someone, right? Reach out to someone. Reach out to me and say, hey, I've got this lead. I have no idea how to help them. Or I've got this buyer's got all kinds of money saved up for a down payment, but there's no way that they can get into a traditional mortgage. Make a phone call. Maybe we can structure something. Personally, I have given leads to investors, say, hey man, I can't help this person. I have no idea what to do with this particular lead, right? And they've come back to me and say, hey, I think there's something to be done. Let's meet with the sellers. And I've listed several properties where an investor has come in, made updates to the property, and I listed it for them, right? And I took advantage of that lead. I rather, myself, make some money out of every lead that I get than 100% of no deal. Make sense? You guys have any questions or anything you guys want to add? No?
What's next?
This is it. This is the last one. Yeah, this is the very last point that I wanted. This is just a bird's eye view. I can talk about novations. I can talk about fix and flips, right? But first, what I want to know is, are you guys interested in learning more?
Yeah.
Yeah?
Yes, definitely.
These strategies, this last year, no, I'll take it back. The last year and a half have helped me, aside from my commissions, well over 100,000 by now seeing things from a different angle. That's why I asked you guys the question, can you guys tend to make an extra 50, 60, 70 grand? Just by understanding a little bit more what else could be done with the real estate. Exactly. Now, I'll go up a step beyond. She said knowledge is power. Applied knowledge is the real power, right? There's tons of people that will sit on YouTube and watch all kinds of videos, but they never do anything with the knowledge, right? I mean, you can listen to books until your ears fall, audiobooks. I do that all the time until your ears fall off, right? Or read until you can't read anymore. But if you don't apply the knowledge, it's worthless.